Hello, everyone. I'm hoping that we are now live. This is the Banker Midweek, and we are back live on LinkedIn as a little experiment. So we're trying to see whether you, our audience, like us better audio only as podcast or would like to interact with us on LinkedIn Live. So it's up to you to decide. But anyway, joining me this week is Barbara Pianese. Hello, Barbara.
Hi, Liz. How are you doing?
Very good. Whenever you join me, it's always sunny outside.
Okay, that's
I
good.
know. Made fun of Anita Hauser last week, saying she only joins when there are crises, and you join when it's sunny. So it's very
Okay, good.
good. So those of you know, the Banker Midweek is our weekly discussion of stories that are on the Banker site right now, and stories that we have our eye on, which will influence future
Mm.
Banker stories. So we're going to start with stories live on the Banker site right at the moment. So please, as soon as this half hour live LinkedIn is over, go run to thebanker.com and read some of these stories. So we have two really big interviews on the site right at the moment. And the first is with CaixaBank's CEO, Gonzalez Gordazar, which, everyone knows I'm the worst pronunciator in the world. But he talks to the banker about lessons from CaixaBank's regional expansion. And it's very interesting. They have a policy, an organization where they're very much a retail bank in
Mm.
Spain. And then out of Spain, they really kind of focus on their wholesale. And corporate and corporate expansion, and the second we have an interview I did with Nadia Hijazi, who is HSBC's global head of wholesale digital channels, and that was a really interesting interview, which I'll comment in a bit. Any comments on the Caixa Bank? It's very always good to get CEOs of global banks mentioned in the banker. Was there anything that came out of the interview that you thought was interesting?
No, I think it was quite interesting to see that this bank is still expanding even in these troubled times.
Mm.
So I think it's mentioning the Italian branch, so we're gonna see how they're gonna operate there. So it's quite interesting to see expansion in this,
Mm.
you know, optimism.
Excellent. And then
Mm.
one of the things I find interesting, I sat down with Nadia a week or so ago, and she joined HSBC from her home area of the United Arab Emirates, and she said, "I've always said if I ever had the opportunity to be in a leadership position, I was going to create a team that was closer to being international because of your provenance."
Mm.
And the focus of the organization is international, then your teams need to be international. And she's done a lot to increase not only female leadership roles within the bank, especially in the tech and the digital areas, but also people from other countries and other regions. And she's done a lot of work and had a lot of success on that. And I just that sort of leading from the top, I think, is really the key to diversity in the banking industry. And just as a kind of tag to that, the Joy McKnight writes in her
Mm.
editor's blog this week, "Can we wait 140 years for gender parity?" The 10th edition of the OMFIF's Gender Balance Index paints a gloomy picture when it comes to the progress made on senior level gender equality at central banks, commercial banks, pension funds, and sovereign funds. I don't want to wait 140
Well, especially because I'm not sure we will be there.
I know it's very, very annoying. I do, as I mentioned before, we are live. I can't really see if you have any questions or comments, so we're going to, we'll see whether or not, as we take this forward in the coming weeks, we can fix out some of the kinks. So if I don't get to your question, if you put it in and I don't see it, I do apologize, but we will probably get to it later. Yeah, no, I did. This is too depressing. I'm going to move on to a story you wrote, which is much more interesting, looking at Latam central bank governors on the recent banking crisis. And they seem to have kind of that the recent global banking crisis
Mm.
doesn't really affect that region very much. But since you wrote the story, I'd love to hear more about it.
Yeah, so it was an open session organized by the IDB, the Inter-American Development Bank, and there were the central governors of few of the countries in Central and South America. And what I find very interesting was their focus on climate change, which for some of these countries is really a relevant topic. If we think about Chile, is really has been facing in the last decade desertification. So,
Mhm.
and Central America has been hit by hurricanes. So, I really felt that these officials were trying to see how central banks can do to prevent these issues,
Mhm.
and while maybe one of them was just actually saying, well, it's not our focus because we are central bank, is mostly the politicians that should do something. I think they are focusing on the topic, let's say.
I mean, it is
Mm.
interesting. Climate change and sustainability is becoming more and more of a priority for the banking industry globally, which of course we're covering on a regular basis. So I found that very interesting to see that there is a world outside of Credit Suisse, UBS, and Silicon Valley Bank, which we will get to very soon. I do apologize. But before we do that, it was very interesting. So our Middle East and Africa editor, John Everington, just came back from Saudi Arabia. And he has a story on the site. Oil boost complements Saudi Arabia's economic reform agenda. So, April of this year is the 7th anniversary of Saudi Arabia's ambitious Vision 2030 development program. What I found quite interesting about this is they are considering the region trying to move away from their reliance on oil. Which
Yeah.
kind of counterproductive. But I sat down with John before we sat down for this session, and he said we need to make a point that Saudi Arabia is having some success with regard to diversifying its economy, but non-oil economic growth is still heavily dependent in the region, which is not a surprise. But there have been a lot of achievements in the past 7 years, which is women's involvement in the workplace has skyrocketed. Well, hopefully that is true. Unemployment is, not that I'm doubting them, unemployment is lower, but private sector growth is still below target, and the country is still struggling to attract FDI. Yeah, so it's another, Saudi Arabia is always, there's so much money in that region. It's always going to get a lot of attention. And the fact that they're highlighting women's involvement in the workplace, I think is obviously, hopefully pointing to, as we talked about before, something positive. But yeah. Mm. So moving on, I mentioned we will mention the banking
Okay.
saga. I do apologize. For those of you who are interested in our ongoing coverage of the banking saga, we have a section on our website called The Banking Saga. But there was a story in the FT today about UBS has attracted 28 billion of new money as Credit Suisse crisis has deepened. UBS's wealth business attracted 28 billion in the first quarter, which is citing the benefits of acquiring its rival during that crisis last month. So, Barbara, what do you think of this?
Well, I think the UBS Credit Suisse saga, I think is quite interesting. The fact that this merger has gone through,
Mm.
and probably regulators have allowed this to happen. And even if it was, of course, a crisis situation, but I think it speaks a lot about the importance of regulation. And is it like, does it make sense to create really such a big bank? Are we headed for the trouble? So yeah, we're gonna see. But I think that the regulation topic is quite relevant.
I mean, it's interesting. There's also, I know that the board of UBS and the shareholders are really kind of taking a critical eye over their acquisition of Credit Suisse. I think there was a story we talked about on a previous Banker Midweek about the board of HSBC. Similarly, had some criticisms about their acquisition of Silicon Valley Bank in the UK. But I guess that's just the nature of any sort of merger and acquisition. Moving on, which is still part of the banking saga, but I'm going to talk about this slightly differently. First Republic was another U.S. bank which had a collapse, which kind of led to a lot of commentators worried about contagion, and are we looking at another 2008 banking crisis situation? So anyway, their shares plunged as it revealed 100 billion in deposits of flights. Now, the reason why I'm going to take a different stance on this is because I'm going to I'm going to focus on another story that was a comment in the FT, which is tech's obsession with founders, CEOs is not over yet. For those of you listening who aren't aware of Silicon Valley type startup culture, there is a real cult of the founder. You have Jack Dorsey with Twitter, and Mark Zuckerberg with Facebook or Meta now, whatever they're called, and but then they look at other companies that aren't run by the founders anymore, and there is this. This First Republic Bank was a California-based lender that really kind of, much like Silicon Valley Bank, its business was the wealth business of tech entrepreneurs. And now in a very high interest rate environment, that whole tech culture, it's kind of lost its sheen a bit. It was very hard to criticize that culture during the party days of the tech founder. And now there's a lot of the growth over profits, and
Hopefully.
hopefully I'm going to
Because-
pass it over to you in a minute because I know you've read a few books. I'm very, very vocal about. I've always been critical of the growth over profits and the treating founders like gods when they're human beings, fallible human beings who sometimes create great companies and sometimes make huge, huge mistakes.
do both at the same time.
Yeah. So what do you think, Barbara?
No, I mean, I was reading this article, and I just remember two books that I read about some startups. So one, and I really recommend to you, this book. So one is Uber Super Pumped,
Oh.
and it kind of details the work hard, play hard culture at Uber, and citing all the parties, but also their controversies and scandals that the company experienced. So it was quite an interesting book just to recall all that happened, how they kind of just try to get rid of regulation to impose their business model. So I really highly recommend it. Uber Super Pumped. And another
It's also
one.
a documentary as well. I think it's a TV.
Yeah, maybe there is a TV
I
series.
did that as well.
So the book is from 2019, and I highly recommend it. And the other book is Bad Blood, and it covers the rise and fall of Theranos, which was this biotech startup maybe established 10 years ago. And it was it ended up being valued $9 billion before it was discovered how the founder has been misleading investors. And in both stories, I think in both books, what is quite interesting is how both, like the journalists, the writers, describe the personalities of both founders, and how this personality effectively helped the companies achieve such immense growth results, but at the same time how they ended up, not Uber, but especially Theranos. The founder was convicted of fraud.
I think she's awaiting prison time at the moment. Elizabeth Holmes.
So I think it's quite interesting to focus on the personalities aspects of these people.
I mean, the problem I've always had with startup culture is, especially if you look at Uber, it's they had a lot of internal culture that a lot of people would recoil from. But I think there's a lot of people in the Silicon Valley industry that world that would point to that behavior as the reason why they succeeded, right? That kind of reckless, take risks, type of. But it's interesting you mentioned Elizabeth Holmes and Theranos, because that's very much that fake it till you make it, which is also kind of an old viewpoint in that world. And you look with another startup that's going through trouble right now, when JP Morgan bought Frank, which dealt with student loans in the US, and they basically lied about how many customers they had. And there is starting a company, being an entrepreneur is very difficult. It is very hard, and you need to be a certain personality, but you shouldn't lie. There's a certain bravado. You should be able to take risks, but when you're dealing with people's money, especially, I know Theranos and Uber weren't technically fintech companies, but just don't lie. I don't understand why this is a big deal. Just don't lie about how many customers you have or what your product actually does.
And also the fact that they are always portraying like a startup that can revolutionize things, right? And so we are tempted to think, oh, these things can be done differently, but then is it really like certain business models, like the taxi industry, maybe getting a tax is expensive because
Mm.
if you take into account costs and externalities, probably it has to be so expensive. I don't know. I'm
Well,
just
no,
saying.
hey, now black cabs in London take cards now. So Uber suffered so that we could pay by card. So moving on to another story which came out last week, and the reason why I bring it up is because there's been a lot of commentary on this. Which this is Apple has launched a savings account with a 4.15 annual interest rate, which is much higher than a lot of other banks offer. And so this is big news. Apple is a big company, but this is their ongoing partnership with Goldman Sachs, right? So
What
this
do you
is
think? What do you think?
well, this is
Because
it. This is why I bring it up because there's been lots of commentary about this is big tech coming in and taking a
yeah,
bite out of banking. Um, but they had to have a bank to do it.
yeah.
It's a Goldman Sachs bank account with an Apple frontage. And I think also, especially US commentators, there is just this obsession with Apple,
Mm.
which I know I'm not an Apple person. Everyone
Mm.
knows that who follows me. But it's just it's good. It's a nice interest rate. I'm sure people that use Apple Pay and Apple Wallet and Apple Cash and will take advantage of it. But I called this a bank fintech partnership,
Yeah, definitely.
not
Uh,
a big tech takes a bite out of banking.
no,
What do you,
otherwise, they
you
would.
agree with me?
Yeah, I agree with you. Otherwise, they wouldn't be partnering up with Goldman, right?
Yeah, you've heard it here first. The banker says Apple, Goldman Sachs is a bank fintech partnership. End of discussion. So wonderful. Okay, so I'm gonna have this final story. I'm gonna have to read it out, and I put it in because I have this obsession with SPACs. For
Okay,
those of
you're
you,
not the only one, but
really? Oh,
yeah, you're not
oh,
the
we'll
only
get
one.
there.
But
Why
things
not?
are changing.
I'm a big fan. This is why I was kind of interested in initial coin offerings a few years ago, and they went far. I'm very interested in alternative funding methods.
Mm,
I'm sure people listening to this know what a SPAC is. For those of you who don't, it's a special purpose acquisition company, which is basically a shell company that kind of buys the existing company in a way to make the company public without going through the
mm,
traditional
I,
IPO
mm,
procedure, right? So this kind of caught my eye again in the FT. Earlier this month, London venture capitalist Dominic Perks resigned as chief of the investment firm Hambro Perks, which bears his name.
mm,
So the move was unexpected, and one investor told the FT that they were surprised no further explanation was given, other than Perks offered his resignation with immediate effect. And despite declaring that it was continuing its search for a target just a couple weeks ago, uh, a HPAC announced plans on Monday to close up shop and return investor funds. Okay, so there was another comment, Anthony Saltz, in this article. The vehicle's chair and former senior partner at law firm Freshfields chalked it up to tumultuous equity markets. Now, this is why I bring this up. In the article, it said left unmentioned was Perk's mysterious exit. He played a significant role in the investment group that he co-founded in
mm,
2013, serving as its chair and public face. He also did the launch of London's first SPAC, following a government overhaul designed to help UK markets compete with Wall Street.
mm.
SPACs had a big boom during the pandemic. There's been other high profile vehicles backed by LVMH founder and former Eurocredit chief. Also recently collapsed the SPACs program. So SPACs are dying.
Well, the thing is that aside from even if some of the SPACs, manage to find their targets,
Mm,
etc., were really good returns for retail investors. I think this is really the question, right?
mhm,
Because I think SPACs are really a controversial topics, and a lot of investors are realizing that yes, SPACs are really kind of faster than IPOs, but at the same
mm,
time, their returns probably are good just for kind of the sponsor, and not really for the investors because of the how the SPACs are structured.
hmm. Someone's going to have an alternative investment and fundraising that has legs. What is next? Tune in next week for the ongoing saga as the SPACs turns. Oh, sorry, I'm bad. I just wanted to say as the SPACs turns. So I hope you enjoyed our special Banker Midweek LinkedIn Live. We may do more of them depending on how excited our audience gets with seeing our lovely faces live on air. And you will be able to rewatch this Banker Midweek on thebanker.com all this week, anytime you want on demand. And you can watch any videos on the banker.com site and any of our ongoing podcast portfolio on the podcast tab. So I'm going to say goodbye from Liz.
Thank you.
Thank
Bye.
you. Bye. Bye from Barbara.